Gold prices are hitting new highs, and it's not by accident. Every spike you see on the charts is driven by real-world forces, from economic uncertainty to geopolitical tension. Investors all over the world are flocking to gold, but most people don't understand why it's happening. In this video, we will break down the top 10 reasons behind gold's recent surge in a way that actually makes sense. By the end, you will see why gold is not just a shiny metal. It's a key indicator of the global economy. And understanding it could help you make smarter investment moves. Reason 1. Global economic uncertainty and safe haven demand. Gold has always been a symbol of wealth and safety, especially during uncertain times. When economies slow down, investors look for assets that can preserve their money. Gold is considered the ultimate safe haven because it holds value when other assets drop. Stock markets can be volatile, but gold often rises when fear spreads in the economy. Global recessions, trade wars, and financial instability push more investors toward gold. Even minor signs of economic slowdown make large institutions rethink their investments. This increased demand for gold naturally drives up its price. Investors see gold as protection against unpredictable economic shocks. During crises, gold often outperforms stocks and bonds. Central banks also buy gold during uncertain times, reinforcing the trend. Inflation fears often accompany economic uncertainty, making gold more appealing. Historical data shows gold prices surge during recessions. The 2008 financial crisis is a perfect example of safe haven demand boosting gold. Investors worldwide act similarly, creating a global push for gold purchases. Even small economic warnings can trigger spikes in gold prices. Gold's stability attracts both individual and institutional investors. Countries with weaker currencies see citizens buying gold as protection. Fear and uncertainty are powerful motivators in financial markets. When people lose confidence in paper money, gold becomes the default choice. Many investors diversify their portfolios by allocating some funds to gold. The psychological comfort of owning gold is as important as its monetary value. Safe haven demand keeps gold prices resilient during turbulent times. Every new crisis, whether political or economic, reinforces this behavior. Analysts often track gold as a barometer of global economic health. In short, uncertainty equals demand, and demand equals higher gold prices. Reason to central bank buying frenzy. Central banks are one of the biggest players in the gold market. Countries like China, India, Russia, and Turkey are steadily increasing their gold reserves. Buying gold helps them reduce reliance on the US dollar. Gold adds stability to a country's foreign reserves. When central banks buy gold, global demand rises significantly. Higher demand naturally pushes the price of gold up. Many emerging economies see gold as a hedge against currency fluctuations. Central bank purchases are often secretive, but they impact markets immediately. Institutional investors track these moves closely to predict price trends. During global uncertainty, central banks accelerate gold buying. Gold acts as a shield against geopolitical risks for governments. Reserve diversification ensures a country can survive economic shocks. Buying gold shows confidence in its long-term value. Large purchases create scarcity in the market, affecting private investors too. Some countries even buy gold as insurance against potential trade conflicts. Gold reserves are a safe asset during currency crises. The pace of central bank buying has increased since 2023. These trends suggest a long-term bullish environment for gold. Investor perception of scarcity amplifies the price surge. When nations signal strong gold purchases, markets react quickly. Central banks' actions often trigger retail investor interest in gold. Gold ETFs and futures also follow central bank moves. Coordinated buying by multiple countries compounds the effect on prices. Analysts see central bank accumulation as a clear reason for rising gold. In short, when governments buy gold, everyone else rushes to follow. Reason 3. Weak US dollar makes gold cheaper. Gold is priced in US dollars, so when the dollar weakens, gold becomes cheaper for investors using other currencies. This drives international demand as buyers in Europe, Asia, and the Middle East can get more gold for the same money. Higher demand naturally pushes gold prices up. A weaker dollar often signals inflation or economic challenges in the US, boosting gold's appeal. Emerging market investors see gold as protection against a declining local currency. Even minor fluctuations in the dollar can spark increased buying activity. Central banks sometimes respond to dollar weakness by adding more gold to their reserves. The relationship between the dollar and gold is closely monitored by traders and analysts. As more investors buy gold during dollar weakness, momentum drives prices even higher. In short, a falling US dollar makes gold more attractive globally, which keeps prices rising. Reason number 4. Expectations of lower interest rates. Gold doesn't pay interest, so it becomes more appealing when interest rates are low or expected to drop. Investors move money from bonds or savings accounts into gold to get better returns. Central bank hints of future rate cuts often trigger immediate gold buying. Low interest rates reduce the opportunity cost of holding gold. Historical trends show gold rallies during prolonged low-rate periods. Both retail and institutional investors respond to rate expectations. ETFs and futures often see increased inflows when rate cuts are anticipated. Lower real yields on bonds make gold look more attractive as a store of value. Rate cut expectations also signal economic caution, boosting safe haven demand. In short, when interest rates drop or are expected to, gold gains because holding it becomes more worthwhile. Reason 5. Inflation and fear of currency depreciation. Inflation erodes the value of paper money, making gold an attractive hedge. Even moderate inflation fears can push investors toward gold. Historical data shows gold retains purchasing power better than cash during inflation. Persistent price increases make people look for assets that preserve wealth. Emerging economies often see spikes in gold buying during inflationary periods. Gold is considered a tangible, reliable asset compared to volatile currencies. Inflation expectations influence both retail and institutional investors. Central banks may also increase gold reserves to protect against currency depreciation. Media coverage of rising prices often fuels gold purchases. In short, inflation fears make gold a go-to safe haven, driving its price up. Reason 6. Geopolitical tension and trade wars, conflicts, and political tensions make investors nervous about other assets. Gold is considered a safe haven during geopolitical crises. Trade wars, tariffs, and sanctions often push investors toward gold. Political uncertainty in major economies drives global demand. Even rumors of conflict can spark spikes in gold buying. Countries may increase gold reserves to safeguard against geopolitical risk. Investors see gold as protection when markets are unpredictable. Safe haven demand rises alongside media coverage of conflicts. Gold prices often react faster than other markets during geopolitical events. In short, tensions and wars increase demand for gold, which keeps prices climbing. Reason 7. Strong demand from ETFs and institutional investors. Gold ETFs make it easy for investors to buy gold without holding physical bars. Institutional investors pour billions into gold ETFs during market volatility. Higher ETF inflows translate to increased gold demand. Safe haven sentiment drives both retail and institutional investors to buy. These investments create a multiplier effect on gold prices. ETFs allow global investors to participate in gold markets instantly. Momentum from large inflows often sparks retail buying too. Analysts track ETF volumes as a key indicator of gold demand. Gold futures trading also responds to ETF and institutional activity. In short, strong institutional interest and ETF demand help push gold prices higher. Reason 8. Physical demand. Jewelry and emerging markets. Gold jewelry demand remains high in India, China, and the Middle East. Cultural events like weddings and festivals increase buying. Even at high prices, physical gold continues to attract consumers. Retail buying complements investment demand. Emerging markets see gold as a wealth store, especially during uncertainty. Seasonal spikes in demand often push prices up temporarily. Jewelry demand supports the gold market alongside ETFs and central bank purchases. Investors often buy small gold bars and coins in addition to jewelry. Rising consumer demand can sometimes outpace supply. In short, physical demand from people and markets worldwide keeps gold prices elevated. Reason 9. Supply constraints and mining limitations. Gold mining grows slowly, making supply relatively inelastic. New discoveries are rare and expensive to extract. Limited supply combined with rising demand pushes prices higher. Mining costs increase when gold prices surge, but production doesn't instantly rise. Recycling gold helps, but not enough to meet demand spikes. Supply chain constraints can temporarily reduce available gold. Investment and jewelry demand often exceeds mine output. Geopolitical issues in mining regions can further constrain supply. Analysts see tight supply as a long-term bullish factor for gold. In short, slow supply growth combined with strong demand keeps prices climbing. Reason 10. Market psychology and FOMO. Once gold starts rising, fear of missing out fuels more buying. Investors see others making profits and jump in quickly. Positive momentum reinforces itself, creating a price spiral. Media reports on record high gold prices amplify FOMO. Even cautious investors start buying to avoid missing gains. Speculators and short-term traders add extra pressure. Psychological factors can sometimes outweigh fundamentals. Social proof and trend-following behavior keep momentum going. Gold's historical reputation as a safe haven magnifies psychological effects. In short, FOMO drives additional demand, helping push gold prices even higher.